Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at the traditional markets, S&P 500, and we're going to be talking about Wyckoff Distribution events and phases. But before we get started, I'd like to remind you this is not financial advice. I am not your financial advisor. These markets are extremely volatile, so trade at your own risk and never put in more than you're willing to lose. Alright, so here we have the S&P 500, and we're looking at the weekly chart. And basically what we're looking at is the different phases of Wyckoff distribution. And you see we basically come up off this parabolic run. We have our preliminary supply, and then here you'll see we hit our buying climax. And then after the buying climax, we're going to dump down. People think we've topped out. We actually came down to the 50 week moving average, found support, and we then put in our first support line. Off of that, we got the automatic rally. The automatic rally takes us back up. We're going to retest the highs. That's our secondary test. We failed to achieve same highs, come back down. We do in fact consolidate again on the 50 moving average, and we're able to prevent, this is the 10 moving average and the 21, we're able to prevent the 10-21 cross. So we're able to stay in a nice uptrend. So then we actually come up here, we get our up thrust, which when that fails or when that tops out, that's going to put in our second resistance line. The first one was off the buying climax, second one from the up thrust. People think the price is going higher, and then all of a sudden it dumps. And we come all the way down, find some support on the 90 and bounce around, and then we smash all the way down to the 200 moving averages. And you'll see I have two different 200s here. I have the simple and I have the exponential. And you'll see both of them interact. It's nice to just have both of them on there because sometimes you'll get an interaction from both or either one. And there, that's going to be our sign of weakness. That's going to put in our second support line. The first was at the automatic rally. So now we have our first support, second support, that's our support zone. We have our first resistance, second resistance, that's our resistance zone. Off the 200, we get a powerful move up, powerful move. We bust right through. You see we find a little bit of resistance here at the, it would have been the cross between the 10 and the 90. But we find a little resistance, then we bust through it. We find resistance again right at the cross of the 50 and the 21. Bust right through that, come up, come back down, retest the 10, make sure that we're back in the uptrend, and then we come all the way up, hit the resistance from the buying climax, and we dump back down to the 10, find support. It takes us up to the up thrust resistance point where we again sell off, come back down. We make it to the 50, but not quite down to the 90, and then boom, powerful move back up. And this is when everyone got faked out and said, we're going higher, we're going higher. And then bam, we hit the first resistance, hangs off, comes to the second resistance point, and then we put in a new high. And this right here, that's our spring. This is the up thrust after distribution. And the whole purpose of this right here is to trick the entire market into thinking that we're going to higher prices. We just broke out. And what happens? You just got caught in a trade. And as soon as that up thrust after distribution fails, we dump straight down. We come down immediately to the 50. We did actually find a little bit of support. It wasn't immediately. We come down to the 50, and then you'll see that's where we were kind of consolidating. There's a little mini distribution phase going on right now. We're going to try to punch up one more time, and when this fails, we're going to dump. And it's going to come down. That's going to give us, essentially, we're going to be entering phase D. We're finishing out phase C right now. We're about to enter into phase D. And phase D is where it gets bloody because people are going to realize, this is not, we're not going to higher prices anytime soon. So what's going to happen here? We're going to dump down. We're going to find support at the 200 moving averages. When we come to it, it's going to line up almost perfectly because they're still going to be coming up powerfully. Before that happens, actually, we'll definitely bounce around on the 90 here. So we'll come down to the 90, we'll bounce a little bit, we'll come back down to the 200, and look, the 90 is going to start curling over, so we're going to bounce off the 200. It's going to take us right back over to the 90 here, and then we're going to find that as resistance. It's going to dump down. We'll probably dance with the 200s a little bit, but it's going to go straight through them. We're going to hit that same low from before, and when we punch through that to a lower price, that's going to be our sign of weakness in phase D, and that's going to let people know this is it. So when we get the powerful bounce off that second support, it's going to come up, and we're going to hit this old support that's now going to be resistance, but we're going to punch through it, and by then that's right where the 200s are going to be at. So we're going to hit that 200, fail to break above it, come back down here, put in a lower high, and then after that it's finally going to break, and we're going to get marked down. We're going down here. Um, After that, you know, it's tough to put targets out that far, but I think it's very likely that we're gonna just come right back down to this old zone at about 1825. So I think it's very likely that 1825 area is where we'll bottom out on the S&P 500, which is currently at $2,869. So that is a massive, massive dump, and we're just gonna get a measure move on this real quick. Right now, people are losing their minds. S&P's down about 5% from the high, maxed at about 7% down, and if this plays out, that's about a 40% drop, a 40% drop in the S&P. So, and there we're likely to find a sharp bottom and then bounce. So that's S&P 500 on the weekly. Wyckoff distribution theory, the different events and phases. We'll see how they play out. It's going to be some very particular, very specific targets with the moving averages. I think it'll be interesting to come back and see how this is all played out. As a matter of fact, what I'm going to go ahead and do right now is I'm going to put a timeline in here. So I'm going to stamp this one just so we know with the bright blue, and that's where I drew the chart in, and that's where price was at the time. I'm actually going to take it in one more week because this one's playing out right now. So yeah, that's where we draw the chart at, so we can see how that plays out over time, and you know, we'll see how this looks. You know, a few months or even a few years from now. We're looking just this without any actual like time targets, just drawing it out. It's leading us to like over 2021. So more realistically, it's going to be way longer than that. So, but yeah, we'll see how it ages. So. Thank you for tuning in today. Welcome to the channel again, and I hope you come back and check us out again. This is Wyckoff Distribution S&P 500 crypto trend trader, and signing out.